Yeah, hi everybody. Good evening. Good evening, ladies and gentlemen. Yes, it is now 8 o'clock Eastern time. Good evening, everybody, and welcome to another edition of DayTradeSPY.com's introduction to trading and weekend review. And let's move along here. Today is May the 5th, 2024. I think we're going solo here tonight. I don't believe that Aaron's going to be joining us here this evening. And while we're waiting, a lot of people are still joining us here online, so we're not going to start the recording button quite until they get a little, a few more people get online here. All right, gang, come on in. Lots of room right here in the front. I see they're all lining up. Come on in. Okay. Already got a couple questions up on the board here. Okay, we're going to get to those. So, meanwhile, do a little housekeeping here. So let me get to these questions first. Somebody's asking here, what is the name of that song, Loud and Clear? I can never find it anywhere. No, it's not. It is called Loud and Clear by a group called Life is an Epic Film. Never heard of it, but it's a great song, and so we had to buy it, and that's that's why you won't find it on YouTube. So anyway, Life is an Epic Film is the name of the group, and the song is called Loud and Clear, and really kind of a nice little song. So here's another question here. People have been watching you for a while here. I see you've got this Bernese Mountain Dog. You keep saying she's 12 years old and is still in good health. They're only supposed to live till 8 years of age. How do you do it? I'm a dog lover myself. Well, I'll tell you, who's it that wrote that? I can't remember that. I think his name is Al. Well, Al, we look at Lucy as one of the family. That's her right there. That's the picture of her. She's one of the family, and you wouldn't give your kids dog food, would you? Well, why would we give Lucy dog food? She doesn't need dog food. Only if we're desperate. But we actually take really good care of her, and we cook for her. So tonight was Italian night. She likes pasta with cheese and pizza. So she had that tonight, and sometimes it's a meat night. She'll have steak, she'll have hamburgers, she'll have, all kinds of different stuff. So she kind of eats human food, and and for that reason, that's one of the reasons I attribute it to her being so healthy and still a very shiny coat. And I won't say she's going strong or anything. Her still got some problems with her back legs, but we have to help her with that. But she's starting to wind down. So anyway, all right. So let's move along here. All right, a little more housekeeping. I think I'm going to ask you, folks, if you have any questions or comments, you'll find a little questions box icon on your Zoom dashboard. You're just going to click on the record here button. Okay, and welcome to DayTradeSPY.com's introduction to trading weekend review. It is Sunday, May the 5th, 2024. This is our weekly fireside chat. All right. And if you are new here, let me know in the questions box that you're new. Just want to get an idea if anybody is new here, how many people are new, and if you are new to options, tell me if you are new to options at all, and then we'll quickly do a review of options. All right, and okay, Justin, you are new here. Okay, maybe we'll do a quick primer on options as well. Right. Okay. So, all right, we'll get to questions. Okay, some new people are joining in. All right, no problem. All right. So, yeah, I was going to say here. So sometimes I was going to say here. So, if we get into any technical details, you don't know what we're talking about. Don't worry too much about it. You're not going to miss a whole lot here tonight. But if you are an old, like very familiar, we do get into some pretty basic stuff. I'm just going to ask for your indulgence here for the sake of the new people here. So we kind of have everybody here, right? Kind of have everybody here. So a wide range of experiences here. Some people don't know anything about options, never heard of options, don't know what they are. They're going, huh? What are that? What's that? What's options? And other people here are, of course, obviously seasoned traders. So new here. All right, new to options. I'm new here. I've done options. Okay, first week signal. Okay. Jim, good to have you here. All right, sounds good. So here's the disclaimer. I give you a chance to read it. I believe this disclaimer should be appearing. I know that midstream to the registrations, we did implement a couple of new changes there. One is that the put the disclaimer up, and the other one is that on the registration form at the bottom of that, somewhere in there anyway, you should have a link to an ebook, Cake Butt Spy Options. It's an ebook we had written a couple years ago, and it's still very valid. So anybody who's new you might want to get that ebook. It's actually pretty cool. I think it's about 18 pages long or something, so it's kind of pretty cool. Anyway, folks, you alone are responsible for all your own trading, and past performance does not guarantee future results. Charge courtesy of Schwab, Thinkorswim, and also Tasty Trade. All right, so here we are. Let's meet your host, and that is me here with the in live in the background. You'll see the still little light out. Pretty soon it's going to start getting dark. Might even see a sunset. Not really sure. We face west, but it's kind of cloudy, so we'll probably won't see the sun. But anyway, my name is Hugh. And that's Aaron over there on the right side. He's got the night off tonight. Gave him the night off, and I'll just go solo here, hoping to keep this within about an hour in length, so we don't mess y'all up here. Maybe go a few minutes over. It depends on the questions and whatnot. So anyway, folks, I learned trading. I come from a corporate background. Where I used to be an internal auditor for an insurance company, and I used to hand off a lot of my money to my financial advisor for to invest in my retirement. Didn't really work out very well. I blew up half my account and took control of it, learned how to do this myself, and took all these courses, different things. But most of what I learned the hard way. Call it the school of hard knocks, right? And most of what I teach you didn't learn in any courses, all right? Some stuff you learn in courses, of course, but a lot of the real good stuff, the whole emotional control stuff, psychology of trading, and that's really what it's all about. This game is entirely, well, I won't say entirely, you do have to know something, but I would say 95% it's between the ears. This is actually a mental thing, okay? Between your ears. That's where it matters. The brain matter. And and I find that people who lose in this business, it's because of lack of control of their emotions. And those who are successful have very good emotional control. And if there's one thing that's going to identify the difference between winners and losers in the options market, that's exactly what it is. Okay, it's got nothing to do with the stocks or the economy or the options that you buy or your strategy. Obviously, that has something to do with it, but there's markets go up and they go down and they go up and down all day. So, and with options, you got some real, some real um, high delta, which is it's very elastic. In other words, you don't need much of a move on the stock to make a huge move on the option. And we'll go over that in a little bit. So it's not uncommon to see your option drop 20, 30, 40, 50, 60, 70% before it comes back in a profit. So it's a matter of controlling those emotions and staying with it when it's in a downturn. Because if you have time and if you believe the market's going to go up for whatever reason and it goes up, the last thing you want to do is sell for a loss, right? But it's very common to see your options go into a loss before they come into a profit. That's not unusual at all. Anyway, I've been trading internationally, professionally for well since 2010. So we're actually in our 14th year of doing this, which is actually very good in this business. In this industry, I don't know of any other company that's been in this, inconsistent like this of this size for that long a time. Now, I'm sure there are some, but we've been doing this a long time, and it's because probably because we are successful and we actually care about our clients, and we aim to do well with them. So um, I'm looking for short-term breakouts, small daily gains. You'll often see me shooting for these small gains, 5, 6, 7% scalps, even less, and kind of get into that. These are some of the strategies that we do. It's a lot easier to get 5, 6, 7% than it is to go for those longer term home runs, right? The game is won in this business. The game is won on singles and doubles, not so much, not so much triples and home runs. Everybody gets them once in a while, and yes, we still get them. But it's actually the singles and doubles that are going to win the game here. So, and what I do is I combine fundamentals and technicals along with the emotions, psychology of trading, and that's how I determine my trades. I aim for high probability trades. I don't just jump in just because I can. I'll wait patiently and then jump in when I want, when I see the opportunity here. So, and of course, some people say that I am better at looking than Aaron, according to a recent survey. However, Aaron, he opened his first, I'll tell you, Aaron's smarter than me. So, and it's unfortunate he's not here with us tonight, but maybe I'll pop in later. I'm not sure. But anyway, he opened his first trading account when he was 17 years old in high school. And I guess he must have been the outcast or something when all his friends are running around, playing sports and chasing girls or whatever. He's in the library flipping through the Wall Street Journal and some of these trade journals and different things. But that's what he was studying, and he mastered this deep dive technical analysis. He gets right in there, like he's like a massage therapist, gets right into the bones, and it's painful, but he he's mastered this stuff. He's actually very good at it. He used to be a formal technical analyst for a $150 million fund, commodity fund. And Eagle Financial Products took us over, I want to say about a year and a half ago, and they were able to scoop Aaron as well from his previous job to come in and help out with the trading room. So this is what he does with us, and he's an excellent trader. So we really enjoy Aaron with us, and it's really too bad he's not here tonight. But he'll be in the trading room tomorrow morning. So anyway, pretty funny guy too. He's a lot younger than me. I think he's about 41 years old. I'm 69. Lives in the Maryland area. I live in Western New York. So we see each other every a couple times a year, and trade shows, different things, whatever. So anyway, super nice guy. And let's get on with the show here tonight. Just want to tell you about SPY on the market. All right, for those of you who don't know, this is actually a newsletter that goes out. It's an e newsletter. It goes into your inbox every Thursday morning. It's actually just a very brief 2-3 minute read, very light, relevant, entertaining. Subscribe right there at daytradespy.com. This week's topic is day trading is sexy. You're not going to want to miss that article. It's actually kind of a really funny, interesting article. You're really going to want to watch it. You're going to want to see that. So, how do you subscribe to this? Well, you can actually get this article in two ways. First of all, subscribe. All you have to go to do is go to the website daytradespy.com and enter your email address there. You're going to get this free report, tips, tricks, and traps from the trenches, and get that. You'll get that. Get your name on that list. The other thing you can do if you don't want to subscribe is simply go to the website, which is DayTradeSPY, and let me bring it up here. And we tend to post the newsletters up here as well. And last week it was why I don't like to use stop losses. So just click on that, and of course uh, the um, you're going to get the newsletter that way too. But I think if you subscribe, you're going to really kind of enjoy it because I think it gets posted on the website a day or two later. So this way you're going to get it right when it's fresh, right off the presses, as they say. All right, so tonight's agenda. What are we going to talk about here tonight? Review of last week, preview of next week. Going to give you an update on the 2 to 10K challenge. Going to give you a 2-minute tutorial and have some questions and answers and how we can help. But right now, what I want to do is I want to go back to my Q&A here. Right, some new people. Okay, not new. All right. Good evening, Hugh. Okay. If we have enough people that want to know what options are, let me know. Okay. But I think for the most part, you may be new here. It sounds to me that you're new with us, but you have some familiarity with options. Okay. Some familiarity with options. So we'll advance further with the program and perhaps do an options primer later if enough people want it. Okay, I'm not trying to tie everybody up here with an options primer if you're all sort of familiar with it. All right, but this is what we're going to do here. Take a look at last week's. Let's get into it. Look at last week's. Here's what happened last week. All right, so here's what the chart looked like. This is actually from Schwab Thinkorswim. Each candlestick represents 1 hour in time. On Monday, we had a low, no news day, mostly technical trading, kept SPY range bound for the most part. We had our ups and downs. We come down and find some pretty good support, jump back up. Tuesday, some news came out. We had an employment cost index. It came in at actually about 20% higher than the forecast. Combined with lower consumer confidence ahead of the Fed Reserve rate announcement, well, pessimism set into this thing. And once the stock started to trend, there was a big sell-off. I think it was right around 10 or 11 o'clock. And it attracted other sellers as well, pushed the market down. By the end of the day, we're down about 10 points. That was Tuesday. It was just sort of a crash and burn kind of a day. I think what it was is getting ready for the Fed announcement, which was actually on Wednesday. That was the big day. There's a lot of skepticism in the market because of that. Um, Investors feared, even I even heard that they're fearing perhaps even a rise in interest rates because the Feds were not very impressed with the fact that inflation is still very difficult to fight. They're not hitting their 2% profit, their 2% target, inflation target. Very persistent. It's just rearing its ugly head, kind of like whack-a-mole, you know. Um, they get it down in one area and then it pops up somewhere else. So this is what the fear was. Come Wednesday, the markets were fairly range bound until about 2 o'clock or so. That's when the Fed rate announcement happened, along with the Associated Press conference. A lot of volatility. And whatever Powell said shot the market up here from about 501 all the way up to 507 and a half, even into 508 before the end of the day. And then came right back down again, right back down to about 500 and change. Wrapped up the day. But then the market started to push back up in pre-market, post-market the next day. Excuse me. And Thursday, we had lower than expected unemployment claims. Well, that initially moved SPY down, right? Because lower unemployment claims tells us that uh, people are working. Employment is pushing to the upside. The economy is chugging along very nicely. Thank you very much, which is inflationary. Market did not like that. Came back down, tested 500 for support, even a little bit lower. But it was around that 501 that we found that there was some actually, there's very strong support there. And when the stock started to move back up. It started to move back up, excuse me, on the anticipation of some good earnings from Apple. Because we're still in the midst of earnings season, and Apple was actually set to report at the end of Thursday, about 4 o'clock or so. I think 4:30. They're supposed to release their earnings. Well, lo and behold, they did, and it moved the needle on the tech sector, which Apple being, I think, over five and a half, something like that. Capitalization on the S&P 500 is pretty strong as a singular option, a singular stock. So it actually encouraged other stocks as well in the whole market to go up. We had mixed economic news, but swung SPY in both directions, but primarily again pushed up because of the tech sector, which was actually led by Apple earnings. That was on Friday. Even topped over 512 on Friday. We got back to a level we haven't seen in a long time. So from a seasonal chart, those not familiar with this, the blue line is where SPY is now. The red line is a composite of the last 5 years closing balance on the daily chart. And let's just zoom in on this. There we go. All right, that's better. Just getting a drink of water here because my throat is very dry. So we take a look and see what happened from a seasonal standpoint. Looks like SPY dropped 2 points from the last week to now. And also SPY slipped about 7 points as we head into the next week. Now, is SPY going to do the same as it did the last 5 years? Not really sure, but they're going to be day-to-day variances and vacillations along the market. So that's what it was historically. All right, last week, what happened? Well, that back of that inflation still is not yet been broken. Okay, we're still pushing for this inflation to come down to that 2%. Feds held the rate steady though, but they indicated that conditions are not improving at the pace they would like to they would like, and they may actually even change their policy anytime soon. They were going to drop rates slowly earlier on than midstream, but not really sure it's even going to happen. Possibly not even this year. We'll see what happens. Next rate move will still likely be a cut, but really much later in the year than anticipated. Labor market, both the villain and the hero. Labor costs. Labor costs. We found labor costs to be. Let's see, it appeared in there. Here we go. Okay. Labor costs. Data stoked concerns of ongoing inflation, while the end of the week report came in cooler than expected. Allayed interest rate concerns, while still remaining supportive for consumers. That's kind of the big one there. And most of the S&P 500 companies already reported their Q1 earnings. As a matter of fact, I think it's about 80% reported the Q1 earnings. Profit picture continues to brighten, largely beating expectations. I understand that for the most part, they are about 7.5% higher than the expectations, analysts' expectations. So as a general consensus, the earnings are pretty good. They're pretty good. Markets remain resilient as expectations for the Fed's rate cuts have been pushed out. Earnings growth should set the tone for market performance this year, and we'll see what happens. This is the way, excuse me, the S&P year to date looked. Had a nice run to the upside. Came back down here early part of April, in the middle of April. Last week started to push back up. And here are the numbers. S&P up year to date, 7.5%. This week only about 0.5%. NASDAQ pretty well the same, 7.6% for year to date. The Dow is only up about 2.6% for year to date. Okay. Checking the week ahead. This young lady's got it right here in her hands. It's going to be a low or no news day, Monday, Tuesday, and Wednesday. Not a whole lot on the calendar. Thursday, we got unemployment claims coming in, and consumer sentiment and inflation expectations coming in on Friday. All right, so that's kind of the forecast there. Um, Preliminary University of Michigan consumer sentiment and also inflation expectations for Friday. That's kind of the situation there. Excuse me. Also, I believe on Monday, I think it's Monday, we have Fed members Barkin and Williams speaking. That's going to be in the afternoon. They're pretty neutral, so that's not going to have much of an impact on the market. I believe it's on, was it Wednesday? Cook is speaking, and also we have Fed member Bowman speaking. I believe she's speaking. I had it here. What day was it? I think it was Thursday. Bowman speaking on Thursday. I'm not really sure. I kind of lost it somewhere in the mix here, but Bowman is actually pretty hawkish. Again, I believe that is after the morning. It's sometime in the okay. Yeah, it's actually on. Okay, she's speaking Friday morning. She's speaking Friday morning. We'll see what she's going to be talking about here. Going to do to speak about the financial stability risks at the Texas Bankers Association annual convention in Arlington. So I'm going to see what her comments are like. But most of the attention is going to be on consumer sentiment and inflation expectations on Friday. Bottom line on all this, earnings continue, right? We're still about 20% companies still yet to report. Not too many big names, nothing that's going to influence the market all that much. Magnificent Seven has already reported. So we're just going to be seeing, I think Lowe's is going to be reporting on Thursday or Friday or something. And some of the other names like that, Uber and some of these other ones, but nothing that's going to move the markets. Volatility could be low Monday through Wednesday and then moderate on Thursday and Friday. All right, so nothing now. Of course, there could be some news items that are going to be added along the way, but right now that's on the calendar right now. So the trick here is to just take modest gains throughout the week. May want to be very careful on what you're doing here. Again, the seasonals tend to go down. Earnings season tends to bring markets up, especially with better than anticipated earnings. So that's kind of where we're headed there. But just take small gains throughout the week should be fine. Kind of a take a bit of a rest on that. All right. Folks, we've got opportunities. The market gives us opportunities every single day. Plenty here, opportunities, and we show you how to spot them and how to trade them. And I think that's really what it's all about. So let's talk here a little bit here about the 2 to 10K challenge. We finished it up a little bit to the negative, but we are giving you a very detailed summary report. It's going to be distributed this week. We have it in with the big boys. They're actually reviewing it right now. So that should be coming out. Watch your inbox for those of you in the trading room. I believe that's where it's going to go because that's where we did the 2 to 10K challenge. And then just wait for the next one. All right. All right. Yeah. How about my personal trade? Yes, I want to talk to you a little bit about this. All right. So I don't. Okay. So I normally trade SPY, and I don't normally even trade. I have I have I just trade for fun, but I didn't tell you how many options I traded. Um, because I'm actually, according to doctor's orders, I'm not actually supposed to have real trades, but I do trade real. I do trade real, not all the time, but I threw out Fridays trades here. But actually, I started this here on Thursday afternoon. I'll admit at 3:46, I jumped into some Apple contracts. I bought the 180 calls for Apple for a dollar three, and I sold them Friday morning at 9:30 for 680. That was a very good trade. Made more than six times my money. On Then back to SPY on Friday. Just did a couple of small Friday trades on SPY. Picked up 17 cents in 1 minute from 9:40 to 9:41 on the 511 calls. Jumped back in at 9:53 with the 512 calls. And I picked up 13 cents there from $1.32 to $1.45 in 7 minutes. Now, if this had only been 10 contracts, trade number one would have been $5,770. That's the gain on an investment of $1,030. 560.2% on the Apple trade. Again, we don't normally trade Apple. I just did that based on earnings. That was strictly an earnings trade. I anticipated a jump in the market on that one. That's the only reason I did that. Again, I don't normally, and I never even announced these trades. These are not even announced. I didn't want to bring too much light to these things. All right. Trade number two on Friday morning, got it for an investment of $1,280. Picked up $170 in 1 minute, 13.3%. And trade number three, invested $1,320 for a $130 gain, just under 10% gain in 7 minutes. Done by 10 o'clock in the morning. This is the power of options. This is the power of the way we trade options. We do not do spreads. We don't do naked positions. We buy first, then we sell calls and puts using our collect, our systems, our strategies of the underlying fundamentals combined with the technicals that we look at, looking at Aaron's deep dive analysis, and we get a pretty good idea as to where the stock is going to go today. That's kind of the bottom line. All right, where's the stock going now? Where's it going to go in the next little while? Taking a page out of the great one, Wayne Gretzky's play-by-play book. Wayne, for those of you who don't follow hockey, I'll tell you, Wayne Gretzky is the greatest hockey player of all time, and by far, by far. Okay. A reporter asked him once, "How are you so good anyway? What is it that you do?" And he said, "Well, I skate to where the puck is going, not where it is." I thought, "Oh, how profound that is!" And that's what we do. We look and see, well, where's the market going to go, not where it is or where it has been. Obviously, we have to look at those considerations, but that's not going to direct us. The other day, the market was going down in pre-market. I can't remember which day it was. It was down considerably, and we had picks and trades and whatnot, looking at the market going back up. And I had several emails sent to me. I just ignored them actually because I didn't have time to respond to them. And let's talk about that later in the day. Asking you, the market's going down. What are you crazy? But okay, fine, whatever. In the morning we're too preoccupied with the trading room and getting ready for that to answer emails like that. But later in the day, I responded to some of them and just said, listen, again, we look at and see where the market is going. And actually, I kind of like it when the market goes down in pre-market because very often I know for a fact, as sure as you were sitting here, that the market is going to find some support. If the SPY goes to zero, we have bigger problems. That means that the top 500 stocks just went to zero, right? And that's just not going to happen. It's just not going to happen. It could never happen. So I mean, I don't want to use superlatives or anything like that, but it's virtually impossible for that to happen. So there's going to be some support. It's going to come back up, and that's the time I like to get back in when the market goes back to the upside. So, but that's kind of what we do is we look and see where the market's going to go, not where it is. Anyway, you'll notice that I've got a good bias to calls, and I did all calls on this one here, and I actually made some very good money, and that's kind of what it was all about. All right, let's get into our 2-minute tutorial, folks. This is a little segment that we started doing here several weeks ago, and it's really kind of taken on a life of its own here. People really like this, and here's the question here. Why do my pivot points not match up on my real and sim accounts together? And this person uses Schwab Thinkorswim. They've installed their pivot points and they're seeing different numbers on their pivot points on their sim account as they are on the real accounts. Well, the answer to that is any outlying trade or candle may be skewing the numbers. And what you have here is you have a different data feed, or you see the data is sent out in little packets, packets. It's not a continuous motion, okay? But it happens so fast you don't actually see it. It's happening so fast. So if there happens to be a trade that is executed outside of the range of that packet, then it's going to show up, on the other feed. I guess the best way to describe it is to give you a demonstration here. So what to do, just remove the outline candle, bring the pivots points in line. And let me show you an example. Okay, so now this purple dotted line is actually the pivot point. And the pivot is the average of yesterday's high, low, and close. Now, by law, I'm supposed to just show you a sim account, FINRA rules. I'm not allowed to show you real accounts, but this purple line right here might be kind of showing up here, say 504.45. But on the real account, it might be a little bit higher. So what I like to do is when I compare the real and the sim accounts, and I see, well, what looks more realistic, and if I don't see, so if I see this pivot point say higher in this, I look and see what candle would probably have skewed these lines because these lines are derived from obviously the market. And chances are that if that was the case, and I don't know if it has, I'm just throwing this out as an example, quite possibly this candle right here at 410, this candle right here that's had that massive spike to the downside, that might not have appeared on the real account. If at the time the data showed up on this one here and we had a trade right at that moment, then this candle would appear. Some people say, well, there's an errant candle or something. Well, no, I don't think there's a mistake. The program doesn't make mistakes. It just means that there was a share that was traded on SPY way down here at a low of 504.95. 504.95. I'm getting the numbers from the top up here, by the way. And I'll tell you who it is. It's my old financial advisor. He would sell my shares low and buy high. I think he had trouble with that concept. I'm supposed to buy low and sell high, but he would always take my account and seemingly buy high and sell low. I don't know what he's doing, but I just kind of joke around about that. But if you want to get rid of these spikes and these candlesticks and bring your pivot points in line with each other, very easy to do using Thinkorswim. So if you zoom in and you isolate this candle, put your cursor on the candle and right click, you're going to get this menu and just click on correct this bar. Click correct this bar. Now take a look here before I actually jump into it. Again, this candle was at 410, right? 1610. You see the time at the bottom. 1610. Right click, correct this bar, and then you get this menu here. And all you have to do is hit this, remove this bar, click on that, close, and take a look. The candle is now gone. 4 o'clock, 4:05, jump to 4:15. The 4:10 candle, like it's not even there. And that's how you remove it. And you'll find that the pivot points will probably come back in line. Let's see. I can't remember now what the pivot was, whatever it is over there. It may or may not be the same as it was before, but that's essentially how you do it. All right. And it's very easy to do, and I do like to see them together because excuse me, I like to see as accurate as possible for these numbers. And by the way, the levels of support and resistance are all derivatives of that pivot. Once you get the pivot accurate, the other support and resistance numbers will also fall into line, and they too will be accurate. Okay, so I think that's kind of important, and that's really what it's all about. All right, so there you have it. All right, so kind of a short night already. We're already into the Q&A section segment here. So. All right, let's take a look at some of the questions up on the board. Bear with me while I ask them. Actually, I'm reading them. There's one. How come we can't all see the questions? Okay, that's kind of an interesting question. All right, so we don't have the questions up on for everybody to see because I know that sometimes people get a little embarrassed asking a certain question and they don't want to be embarrassed in front of everybody else. So we just only Aaron and I see the questions here. All right, from Mike G for the pick of the day. Why is the stop loss set to 40% if the specified gain is set to 6%? Okay, so when we give out trades like the pick of the day or the signal or anything in the trading room, we give out high probability trades. We've done our analysis in whichever format we do it. In the pick of the day, Aaron and I get together pre-market somewhere between 8:30, 9 o'clock. Usually between 8:30 and 9, we analyze the fundamentals, the technicals, and the psychology. We analyze the market sentiment, everything. We come up with a high probability pick. All right, and it's fairly easy to get that 6%. Most of the time, it happens actually quite quickly. All right. However, there are a lot of new people online who really don't understand perhaps how to exit the trade or what they should do should the market turn on them. So we've changed our format a little bit and say, listen, if you're really into stops, I don't like stops myself. If you're really into it, then just put up a 40% stop loss and preserve your capital. If the market has gone against you that much, well, maybe there's something there where I might just stay with that position, thinking that either organically it's going to come back on its own, or I'll be able to repair the trade if need be. I know a lot of new people might not feel that way or have that confidence or stamina or whatever it is to stay with it. So we just suggested to cut it off at 40%. Uh, I can't remember if we ever had that since we started this putting in the stop loss thing. I don't think we have ever used it. The market's always filled at 6%. Bear in mind, the market does not go straight up and down. Just because it might tell you there's a call, it doesn't mean it's necessarily going to go up right away. It might go down a little bit. It might go down 5, 10, 15, 20% before it reverses and goes back up to give you a profit. So that's the reason we put that in there. So, all right. And this way you save your capital, you prevent from going to zero. I can just imagine some people, if they're waiting for some sort of a magic bullet to hit them on the head, and meanwhile it goes to zero, like let's use common sense in that. So if you insist on a stop, put it in at 40%, probably should be okay there. So all right, Norman, you traded Apple. I wish you'd have told us that. I won at $14. You traded at least yeah, 30 contracts, 60K profit. Thanks for that. So Norm, that happened late afternoon on Thursday. And you know, honestly, sometimes, when people trade like myself, it's you're not thinking of the rest of the world, because I'm looking at the charts, I'm reading the news, I'm reading the inside scoop on what they're probably going to be doing, Apple, thinking like a buyback or some kind of a thing or AI or whatever the thing is. So, and here it is, the time. It's like, okay, I got to get in on this thing. I'm going to jump in on it. So had I actually put that in an email sent out, chances are by the time you got the email and acted on it, you may not have gotten it for $1.03. I don't know what it would have been to. Also, there was an element of risk. I mean, that particular option could have gone to zero just as fast because there was an expiration that next day. That expired that Friday. So if something would have horribly gone wrong, then I would have been on the hook for a lot of money. And I did not, I didn't how should I say, have the 100% confidence like I have on SPY. It was kind of a gamble trade for me. I'll admit, it was a bit of a gamble because oftentimes with earnings, you'll see the earnings coming better than expected, but they'll talk down the Q2 expectations or something, and that's kind of been happening with a lot of the tech sector stocks. They'll say things, yeah, we beat the estimates, but we don't know if we can maintain that next quarter. So then the market tanks on that stock. So I didn't want anybody jumping in, like if I'm going to fall over the cliff, I don't want you guys to all fall on top of me and we all lose, right? Then you would look like then you would think very poorly of me. So that's the big reason. And frankly, I'm not thinking of anybody else when I'm just focusing on that sort of thing. So, but maybe we should talk about some of these stocks in the trading room. I'm not really sure. Maybe we'll look at some of these. I'll talk to Aaron about that. I know he kind of gets into some of the stuff more, so I hope that makes sense. But anyway, we like to focus in on SPY because of it's just such a great stock and sort of a regular income kind of producing stock. Those outliers like the apples on Thursday, that's an anomaly for most of what we do. So, okay. So question here. I'm a new subscriber to the pick of the day. If I'm gone and cannot get into the pick in the first 10 minutes or so of the day, is it still a sound idea to get later in the morning? All right, so pick of the day and the signal, the day trade SPY signal, two kind of similar sort of trades, not the same, but similar. And I'll tell you the difference between these two. Pick of the day is hand selected by Aaron and myself. It is sent out in pre-market to subscribers to be purchased at the market open within the first 2 minutes of the market open. Now, couple things. You have to wait a few seconds for the bid-ask spread to settle in nice and tight with each other within a 2-3 cent range. And the other thing is this, if, for example, the pick is a call option, you'll want to wait, you want to make sure that the stock has got pressure to the upside. In other words, if it opens up at 9:30 and you see the pressure to the downside, you're seeing it with red candles on the 1 minute chart, you'll want to see that turn around and those red candles become green candles, then get into it. Okay. If right away at 9:30 you see green candles, jump right in and buy it right then and there. Okay. 10 minutes might actually even be too late. So I would say there's no guarantee it's going to go. It's going to give you any gains in 10 minutes. Maybe it will, maybe it won't. Very often these picks of the day fill in 2, 3, 4, 5 minutes time for the 6%. Now, most of the time they'll go, they'll continue going on too. So it's not to say they won't, but as time goes by, you're sort of, you're diminishing your likelihood of a return. But maybe it still will work. So I can't guarantee anything in 10 minutes later. So, and the same with the signal. When you get the signal, you basically have 2 minutes to get into that trade. All right. So just stop what you're doing, flip over to your trading platform and buy the option. So the exits on these things with the day trade SPY signal, you put up for sale for a 5% gain, or at the end of the day, if it hasn't filled, get out of it then. There'll still be some value in that option because these options, just like with the pick, they're designed to have lots of time. There still should be some value to it. With the pick of the day, as I mentioned, you're either looking for a 6% gain or a 40% stop loss or something. So, and by the way, most people do better than 6%. That is just a standard by which we have to measure success. So that's what we did. We picked 6% so that any novice new trader should be able to make 6% easy. But a lot of our traders are in there for a lot more money than that. In fact, many of our traders are racking up double digits on these trades. So if you're one of those, then you'll want to follow along and make sure you get those. So All right, some more questions here. Thanks for joining us. Okay, okay. OCO, Tasty Trade. How do I set the last 2 minutes closing by time? I'm not really sure I understand the question, Lewis. I would just say, join in and join your, get on your platform at 4 o'clock and see where the stock is. And if you don't have your profit target by then, with the signal, then take what the market will give you at that point in time. All right, Jeremiah, good to have you here. I haven't had the best results for Kristen. You give us a variety of methods so we can choose how to try to reduce our losses. I'm not really sure why you're losing. We're making money. I'm not sure how you're doing. So, Jeremiah, let me ask you a question here. Are you in the trading room or what program are you in? So we have several programs. We have, of course, the trading room. That's where the rubber meets the road. We're exercising our strategies. We have the OMG strategy, which is short for out of the morning gate. Basically, breakout of the 5 minute candle. We set our support and resistance lines on the 5 minute chart. First 5 minute candle to break out of either of those direction, either of those lines. That is the direction that we're going to go, aiming for 6% profit target. It's been working very, very well. No reason you shouldn't be losing on that one. We also have our bread and butter strategy. We've got our scalp strategies, different strategies. We just finished up the 2 to 10K challenge. The pick of the day we review on that segment, but that's a separate subscription, and also so is the day trade spy signal. So we have these different strategies. If you really want to get into everything that we do, then I would recommend buying and it's still up there, buying the Ultimate Training Workshop right here. Click on that. Go to the website, DayTradeSPY, and go to the top right where it says Ultimate Training Workshop. Click on that. Click here to learn more. I just want to scroll down to make sure it's still there for the same old price. Look at that. All right. Amazing. Amazing. This course is actually a lot more money, but they still kept this 9.95 on. I can't believe it. The IT guys were supposed to drop this after 2 weeks, but it looks like they have not done so. So now this course is actually really, and this goes for everybody. If you want to learn everything we do, you want to get into everything we do, take this course. You learn it on your own pace. There are 11 workshops, about an hour and a half in length each, okay, give or take a little more or less. And we cover everything, all the ground. Introduction options, trading fundamentals. We get into money management, building confidence, mental aspects of trading, support, resistance, chart patterns. We talk about the Greek scalping strategy, out of the morning gate strategy, repairing trades, and Aaron's deep dive analysis. 2 segments on that. We teach what we trade and we trade what we teach. So there's no fluff in here, no filler, nothing that you cannot use. And here's the other advantage of this. So you can pause, fast forward, and rewind as many times as you want. We do guarantee that you're going to have access to this for at least 6 months. Although yet we've not ever dumped anybody that I know of with this program. We also have a workshop here, special bonus, setting up Thinkorswim charts, indicators using Tasty Trade, Tastyworks. So, I mean, this thing is solid gold, folks. Solid gold, and no stone is left unturned in this course. When you have this course, when you understand all this, you'll be perfectly ready to join us in the trading room and actually implement all of those things that you learned here. And there's another thing about this, you should go through them at least once in detail and note the times of these videos that you might want to go back to. All right, then just go back and review them. There are a lot of little nuances that we talk about, little things. It's those little things that make a big difference when it comes to stuff, and little tips, tricks, and traps. So you'll want to get in on that. Anyway, I'm going to kind of beat that one to death. All right, so okay, lots of people are new, but not all trades are going to be winners, and some people are saying they've lost money. So here's what I suggest: if you're losing money or if you have lost money in anything at all, the markets I'll tell you, they've been giving out some head fakes lately. So it's a matter of having the stamina and the staying power with some of these things. It has not been easy for some people, I'm sure. But look at always use money management. By that I mean don't ever trade more than you can afford to lose. Start with one or two contracts, maybe ramp it up to five. Maybe 10 contracts is sort of a good baseline for a lot of people. With 10 contracts, you'll have generally one to two, maybe $3,000 in a trade. If you have $3,000 in a trade, you'll have ample time. When we do safety, so Mondays and Tuesdays, we'll usually have same day Friday expirations. Then Wednesdays, Thursdays, and Fridays, we'll generally use the following week Friday's expirations for safety. Okay. So if the market does turn against you, just be patient because chances are, if it went down for a reason, a news item or something. And the market has a short-term memory for news, long-term memory for support and resistance. If the market goes against you, maybe just patiently wait. Don't go dumping it quite yet. And then chances are it's going to come back around and come back in your direction. Now, if you hold on too long, you're going to lose data loss. So you have to learn how to repair the trades or get out of it before you go down to zero. I never want to hold an option into Thursday or Friday same week because it's well, even next week because I don't want to end up holding it over weekend if I don't have to with a massive data loss. Okay, very important. So, but if you're in our trading room, you're going to learn a lot of that stuff. So that's another thing to get into it. So, how do you set the trade size and the challenge or in general? The trade size. I mean, when you're going into well, let's take a look here. All right, so how do I do the trade size? In your trade tab, for example, on Thinkorswim, you set the whatever you want to. Here's the trade size right here. The number of contracts I want to trade. I can use the plus or the minus button, or I can just simply click on the number. If I want to buy 25 contracts, I'll punch up 25 contracts. Very simple. That's how I get the trade size. Okay. And that's kind of how I do that. So, in the challenge, what I was doing, and there's a whole complete report on this whole thing. So I had a base amount of money that I had to work with, and I could only trade the profits up along the way. There's no facility there to repair the trades. So it was kind of a challenging challenge. There's no question about it. And we had some real quirky things that actually occurred this time that we didn't have in the first two challenges. And I get into that in a big and quite detailed. So it's actually a really good read. Several pages long. Actually, I think it's about 6, 7 pages long, this thing. So you'll kind of want to read through that. So what I do, let's say I have $2,500 with which to trade. And let's say I had an option that I was interested that was costing $2.75. I take the $2,500 divided by 275, and I can trade 9 contracts. Okay, that's how I determine my position size by how much money I had available to trade and how much the options cost. Michael Lamb, thank you so much for that. More distinguished. Love the strategy. Love it. Love those comments. Okay, more right rudder, 6%. Okay, all right. If you run short of time, what is the bread and butter strategy? Basically, well, again, we go over that in the trading room, in the yellow brick road. I mean, the bread and butter strategy. Again, I'm not gonna give you all that. I mean, this is all stuff that we teach, right? That's all stuff in the ultimate training course. This is one of our strategies. Kind of a nice, easy strategy, the bread and butter strategy. Kind of a nice laid back strategy to pick up a good few points, 5, 6, 7%. The yellow brick road is kind of an interesting. I get a question about that a lot. What is that? Is that some special indicator? Well, yes and no. It's not available anywhere else that I know of. It isn't. It shouldn't be because that's ours. It's simply an extension of chart patterns that we see. So we analyze the markets when a chart pattern forms. We just extend it out and we predict pretty well where the stock is going to go. And we punch that up as a broken yellow line. We call it the yellow brick road because you follow the yellow brick road, right? From the Wizard of Oz to the land of Oz. And great things happen. And kind of like the Wizard of Oz. I mean, that's a really good movie. It's one of my favorite movies. Yeah, I know it's a kid's movie, and I think we've all watched it a million times, especially as kids. And we probably just sort of looked at that at the surface when it was first presented to us for many years. But there's some real deep things in there, okay, that are really important, and I think it applies to us as well. Things like, well, the Tin Man had a brain, right? He's the one with the brain. The lion had the heart, and the scarecrow had the brain. Tin Man had the courage or something. But they had these skills, these characteristics that they needed to invoke to get to the land of Oz because they had these challenges along the way, along the road. And that's kind of what trading is like. You're going to have these personal challenges, mental challenges. Sometimes you're going to be called on to have the courage to weather those negative sentiments in the market that are pushing the stock down. In other words, you buy an option and something happens and the stock goes down 10, 20, 30, 40%. And now you're going, oh my gosh, I can't believe this happened again. I'm going to lose thousands of dollars. This is not for me. And woe with me and everything else. But I'm suggesting that, okay, stand back when that happens. Why did it go down? Was it a news item? If it's drifting down, that kind of worries me. If it's a sudden drop, I'm okay with that. So if it's a sudden quick drop, I'm generally okay with that. Depends on what it is, okay? If it's a news item and it's going to go down, hit a bottom because there's all these automated orders that when a stock hits a certain price, the automated orders kick in for buy. I like the price, I'm going to buy. They buy, and the buying, right, that activity of buying, demand pushes the stock up. It goes up, and the price starts pushing up. It's going to hit a level of resistance, bounce off, go back down to support, and then it's going to catch that double bottom support again, start pushing back up. When it gets to that resistance, good time to buy right there. Almost a guaranteed win on those. Almost, I don't want to say 100% because nothing's 100%, but I have no problem putting a lot of money into those trades. Anyway, not getting into all the detail and all that right now. That's not what this is about. This is for you to kind of get into what we're doing, um, and as to why. So I'm, you have the courage. You're going to develop the courage. You're going to have the brains. You're going to learn the stuff. You're going to have the heart to stay with it. So by the time you acquire all those skills and feel comfortable with applying those skills, you're going to hit the land of Oz. And let me tell you, when you do finally master these strategies, um, it's in one word I use sparingly. It's actually awesome, and I don't like to use that word. Overused. Question, do you do longer trades, Larry? I tried it. To me, long term is to the end of the day. Okay. Not to say that I never stay in a trade overnight, but before I get into a trade overnight, I will look and see what's the likelihood of this thing coming to life for me tomorrow or the next day. I don't do swing trades, if that's what you ask. I'm not interested in swing trades. All right. So and again, the rules for the bread and butter, again, that's all going to be taken up in the trading room. Those specific strategies. That's why we're there. Da, 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 da. Okay, is there a good site that we can go to for the history to learn how much options are for the day? To learn how much options are for the day. Well, you can learn. If you want to know what the option price is for the day, Gary, very simple. I'll tell you right now. Go up to the charts right here. The charts up at let's take a look at the chart on the left here, okay? Well, let's just expand this. Maximize sell. Here, up at the top left where you get the symbol, this is using thinkorswim. This is a really cool little trick, right? You want to know what the option price has been for the day. This is how you do it. Up where it says the symbol, you start with the period. You start with the period, and then you put the symbol. This applies to any stock that has options, by the way. And then you put the stock symbol, which is SPY in this case, and then you put the expiration date, starting with the year 24, and then the month. Say the month is going to be May, so that's 05. And let's say the day is going to be this coming Friday, which is the 10th. So 24/05/10. All right, C for call, P for put. Let's say C for call, and then the strike price. So let's say the 512 strike price call option for this coming Friday. You hit enter, and this here is the value. This is the history of the option price right here. You get the stock price over on the right, and of course the time right here on the bottom. And as you can tell, this was actually one of the options that we had traded. And wow, and there you go. We also put up some of these lines and stuff in the sand. But so some of these options, like take a look at what happened here, right here, 10 o'clock. Whatever happened, probably some news item or something. That option hit a high of 399 and a low of and I'm taking the numbers from the top up here. 399 for a high, a low of $3. Almost a dollar range in a 1 minute candlestick. So you can imagine that if you got into, say, this option right here, say at 348 or 350, and you just put up for sale for 6%, let's say 350, add in 6%, that's 371. You could have made your 371 right here. Because over here it hit 370. Well, the next trade here, it high of 373. If you were in, and this is the power of options. What did I say? Right here, let's say you got it for 350. Back in here, 350, and you had it for 371, you'd be out of the trade right here. 371. You'd be out of this trade right here. I'm going to color this line a different color so you can see what I'm talking about. I'm going to color this bright blue and change it to 5. Here's a trade. Let me get rid of some of these lines here. Okay, I know it's just confusing people. People say, "Well, I'm confused." There's nothing to be confused about. This is the power of options, and it's a very powerful program, very powerful strategy. All right, so let's say you got in right here, right? You got in right here for whatever reason at 350, put up for sale for 6% gain, which is 371. Right here in just a few minutes, 2, 4, 6, about 7, 8 minutes, you would have had your 6%. How cool is that? Let's say you put in, I don't know, $3,000 into this trade. You're now walking away with a $180 profit, right? That's the power of options. Options are very powerful. All right, let's move along here. Okay, question with the interest rate comment, do you feel the market will be lower Monday or early this week? Okay, so the interest rate announcement was just on Wednesday. So I think it's probably going to be too early for any high impact to affect the interest rates right now. And on Monday, my guess, I don't know. I'm just guessing. I have no idea. I have no idea. I don't even want to guess. But there's not any news Monday, Tuesday, or Wednesday scheduled that should affect interest rates in any way. Anyway. So if there's no news, it's going to be mostly technical trading. And we're going to probably defer to Aaron on some of his comments with his deep dive analysis as to where those major support and resistance levels are. So we might bounce up to a major resistance level, and there's going to be a lot of selling going on. Might push the market down, maybe some retracement, carry it further back up. We'll see what Aaron comes in with on that one. So, okay, I'm trying to get in some of these questions here. The pick of the day, when do you open a trade? We open the trade on the pick of the day at market open. So the pick of the day is anchored in time. Effectively, what we're saying is that uh, we're saying that the market, given a certain point of entry, will go up or down or both, right? Markets go up and down. They don't go any other way. They go up and they go down. So we're looking and see, well, where's the propensity? Is it to go up or is it to go down? And that's how we determine what the pick is going to be. And then so you buy it, put it up for sale. Okay. All right. But the SPY okay, so on Friday, the prescribed calls, but SPY started flat, dropped probably 20% on the way to retracing, and a gain well beyond 6% gain on the pick of the day. Waiting on the open past the original 2 minutes would have been optimal. So what you want to do is, wait until it turns around, you see the pressure going in your direction, then buy it. Okay. And if you see that on the 1 minute chart, buy it at the time when you see the pressure changing into your direction. You'll get it for a little cheaper price. All right. Okay, I like that. The Fed will definitely and certainly lower rates or raise them or leave them steady. I was actually concerned they might actually raise them. I know it sounds crazy. They're talking about lowering them, but that inflation is not subsiding to that 2%. I thought they might actually talk about raising them. And I thought, my gosh, if they start raising those rates, that market, the stock market is going to plummet, 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 plummet. All right. My subscription expires Monday the 6th. Craig, you might want to get in touch with customer service. I don't know whether it automatically renews or or you have to tell them. I think it automatically renews. Okay, I'm pretty sure. Okay, so another question here from Natalie. Natalie, with your program or your trades, single leg trades or more complex spreads, except no. Okay, yes, good question. She's asking about our trade. We like to do single leg trades, keep it as simple as possible. I don't want to get into, I used to do this before. I never had major success with these. We do not do spreads. We don't do any naked positions. We simply buy first, then sell calls and puts in that order, buy them and then sell them. We never sell first, then buy them back. We don't want to get into a situation where we might end up having to owe the broker a lot of money, right? And we don't use margin, all right? Prefer cash accounts. And this way, if you have the cash, you can trade it. If you don't have the cash, one thing you don't want to do is be indebted to your broker for a lot of money, right? Because you made some bad move on the stock market. And I see that all too often with people, and it's just a real devastation. And it's very disruptive, and it can really ruin your home. It could ruin everything. It could ruin everything. So you don't want to do that. Folks, let's get into something here. I'll tell you what we got coming up here. The trading room. I want to talk to you about the trading room. I talk a lot about the trading room. What is this trading room all about? We'll get this back to some more questions later, I think. Pretty sure we'll get back to some more. Yeah, more questions a little bit. Um, this is actually hosted by myself and Aaron. So combined, Aaron and I have over 40 years of stock market participation. We've been involved for, and now obviously they're not all winners. Don't get me wrong. Don't think that we just had 40 years of solid success. That's not the way it goes. The line to success is not a straight line, as you know. All right, zigzag. Sometimes they go down a lot. I gave up trading a dozen times, but at least a dozen times I gave up trading, you know, but I would never actually leave it. You see, I always knew there was money in this business. And I would stare for hours on end. I would stare and stare and stare. You know what I would stare at? Here, let me show you. I'll tell you what I stared at. And my wife thought I was crazy. First, I would stare at charts, but I also stared at this here. I would stare at these numbers here. Okay. All right, let me get up. These numbers here. Let me get this back in. I spy with my eye. Okay, there we go. I would stare for hours, I don't know, at these numbers here. The lows and the highs, lows and highs, both calls and puts, calls on the left, puts on the right. I would go down, at the end of the day, I would go down and look at these things. And I bring my wife in and say, take a look at this. Take a look at this. Here's an option, 3 cents, 4 cents for a low and a high of 12 cents, 9 cents. 3 times your money in some of these. Look at this. Look at this, 2 cents and 7 cents, more than 3 times your money. And some of these went even more. I say, look at this, 1 cent and 4 cents, 2 cents and 4 cents. Some of these options were amazing. So you'd see 13 cents and 40 cents, more than three times your money. So in other words, at some point during the day, this option was worth 13 cents, and at another point, 40 cents. So, of course, the question is, did the 13 cents come before the 40 cents? Did the 14 cent, the 13 come after the 40? Not really sure. It could have gone either way. Same with the puts. I look at these way out of the money options, lows and highs. I always look at these lows and highs. Now look at these numbers here. Look at this, 10 cents, 31 cents, 3 times. And by the way, this is not even a huge day. Sometimes it'd be 6, 7, even 10 times. It'd be 10 times, right? But between the lows and the highs. And I scratch my head and say, listen, I'm not trying to make 1,000% a day, although it'd be nice, but right? But can I not make 5%? A measly 5%? How do I pull 5% out of something like this? Had a low of 28 cents and a high of a dollar, almost four times. Both calls and puts. This happens all the time, right? This happens all the time. Sometimes you just get twice, like 91 cents and 203. So this happens all the time. So this is what I used to watch and analyze, and I would be so enthralled in this. And I'd say, okay, now I just have to figure out. I'm not trying to make even 100%, or not even 50%. I just want to make 5%, or maybe 6 or 7% on a trade. Can I do that? And that's what anyway, I learned a lot in that. So we come up with these strategies over the many years. And this is where, in the trading room, this is where strategies come alive. These strategies, and here's the cool thing, our strategies work in both up and down markets. And it doesn't matter if we're in a bull market or a bear market, because with SPY, you can actually make money both going up and down, right? Both going up and down. And that's kind of cool. That's kind of cool. So our strategies, we are looking to just get in there for a very short period of time, make our money, get out, get back into cash, wait for the next setup. Okay. And looks like the market might be going down now. Let's get into the downside, get our, buy our puts and take our money when we've hit our target. And that's what we do. So every morning our strategies come alive right here. Learn and earn from the best. I'm gonna blow my own horn here and Darren's horn. We've been doing this a long time, and we know what works for both trading and training. All right, gone through the whole thing. And these sessions are interactive, so you're going to be able to communicate with us through the chat line, questions box. It's exciting trading. It's just really what is. We teach what we trade, and we trade what we teach. All right, there's no question about it. Watch us make real trades, real setups. If you have any questions, you get them answered in the questions box. So that's a facility where you can actually learn. And the longer you're in the trading room, the better you're going to be. And this is the longest running live trading room since 2001. How about this? Let's fix this line up right here. Since 2010. All right, not 201, 2010. There we go. Uh, let me save this. Okay, save the file. Um, we've been doing this a long time, folks. All right. We've been doing this a long time. And I got to tell you, those people that have been there the longest are they do very well. I want to see if my buddy Terry is online here. Terry, we have this game that we play every now and then, usually once every couple of weeks, as to where we think the stock is going to end the day. Okay, Terry's not on. This guy Terry. Um, uh, so we'll pick say the first 20 or 25 or whatever people that just chime in and give us their prediction as to where SPY is going to end the day at 4 o'clock, right? And the person closest to it wins an ebook or something. And in the last couple months, this gentleman Terry won it three times, and we're sitting there thinking, how does he do it? How does he do it? Well, when I look back into my history here, Terry had been with us since 2015. So he'd been with us now in his ninth year, and I think he's become pretty good at what we're doing. So I think the next time we do that contest, we're gonna say, Terry, you can't play. You're excluded, Terry. But anyway, longest running trading since 2010. We kind of figured it out. My question to you folks, can you afford not to subscribe to this? You know how easy it is to lose $699 in over 3 months on the stock market. So here's my proposal. Why don't you put that money invest it into your own training first. Learn everything you can. All right. Get involved with us. Learn everything you can. Follow along, and you become a great trader before you put real money into the stock market. Now, for those of you who are new on, all right, what I recommend is this guy's got to stop. He's actually driving me he's very annoying. There he goes. I guess we lost him. Maybe we can go back to him. Where is he? There he is. I can't seem to stop his fluttering there. Maybe there we go. Um, What was I going to say here? So my recommendation, right? Get in the trading room. Start with paper trades. I don't care how seasoned you are. Start with paper trades. When you get 20, 30 good paper trades under your belt, then transition to real money, starting small. All right. It's not either or. You're not either an expert or a novice. Like, get into it slowly, transition slowly, get used to the format and everything, the way it works and the feelings and everything that's involved with it. Get good at it. Then you're going to start making money. As you're making money, start slowly, ramp it up, and eventually you're going to be making a lot of money. All right. That's kind of the name of the game. And also keep a log. Last week, I think it was when we talked about keeping a log. And it's just a spreadsheet, just a spreadsheet. And what you want to do there is record the various, go back to last week's thing, record the various details of the trade, especially in the notes. Did you do something right? Did you do something wrong? Did you jump in too fast? Did you get out too early? Did you get, whatever those notes, keep a good log. Review it. All right. You learn from your mistakes. Celebrate the wins, but learn from the mistakes and take away those lessons. All right. And eventually you'll get good at it. So sometimes people ask me to analyze their trades or what's going on. How come? And so I always say to them, send me your log. Let me look at your trades. And I can't believe how few people keep logs. Like keep good logs, folks. There's a reason for it. Anyway, 6.99 for 3 months, the trading room. That is actually a really good that is actually really good. Where are we going here? That is actually a really excellent value for what you're getting. I can't stress that enough. All right. So let me see now what we're going here. Some more questions. I don't want to keep you all night. Let me ask you a question, folks. Anybody here want to get into the options primer? You want to know what options are? Let me know, and then we'll continue the session with that. If not, then I think if there's not that many people, we're just going to call it off for the night. Let me just quickly go through. Oh, we got a lot of questions on the board here. Okay. Okay, let's do another, please. Okay, and just bear with me while I go through some of these questions. Okay, we'll still get the report in my email after the 6th. I'm not sure how they're going to distribute the email, the report. Craig, if you don't get the report, you were in on the trading room, let me know. All right. And I don't know how quickly they're going to send it out. Sometimes they're not very quick at getting back at us on this stuff. I would say give it a couple days before you email me if you didn't get the report. I'll make sure you get it there. All right. Here your trades are fabulous. Why can't I do those in the trading room with scalps? That's motivation for me to just. Okay, so people are asking for more scalps. We'll probably be doing more scalps. I like scalps. They're my favorite. I know a lot of people don't like scalps. I don't know, it's too fast for them or something. I don't know what it is, but okay. Okay. Very young, 64. I want to be just like you, Hugh. I can taste it. Norman, thanks for that. Oh my gosh. Some of those comments are really great. I'm gonna ring the bell for the ones I really like here. So why don't you tell us about the Apple option? Shame on you. Okay, sorry, Lexi. Yeah, maybe I shouldn't have told you I did it. Okay. You know what? I don't know. I mean, again, I kind of got to beat that one to death here. Beat that one to the core. Um, all right. If you recommend a call action on the market, it gaps up. Do you like to wait for the pullback to buy in? Um, Oftentimes when the market goes up, so here's the thing, especially on market open, the markets go up and up and up, right? And I like to wait for the pullback first to support, and then as it turns around, goes back up, then I like to get back into the upside. Because when it's first going up, I don't know where it's going to find that resistance and come back down. Actually, that's not quite true. I do know where the resistance is going to be. It's when I buy, right? Have you ever done that? The market's going up and then you buy, and then the market instantly reverses, and then you say to yourself, how did they know it's me buying, right? How did they know? You take it personally. So if the market's going up and up and up and up, wait for the pullback. Wait for that pullback, come back down, pick up the support as it goes back up, then buy it back in. Make sure there's enough room to grow into to get your profit target, then you're going to be fine. You should be fine. Where to get the OMG lines? Those are support and resistance lines. We go into that into the trading room. We determine where the support and resistance lines are. Usually they're horizontal lines. Could also be exponential moving averages. It could be strike prices. A lot of different things could be pivot points. Any plans for the new to 10K challenge? Yes, Roger. We are going to be starting that again. I don't know when. We're going to be discussing that probably Tuesday. We've got a marketing meeting on Tuesday. Okay. Uh, why use a stop loss if you're buying time? Okay, Steve, I don't like using stop losses. Therefore, I think they're more for new traders who are very uncomfortable with riding an option until it comes in a profit, or they don't know how to handle it, or repair the trade. So we say that okay, and the powers be wanted an exit strategy. So we had to come up with some kind of a thing. So we said, okay, put a 40% stop loss in. If it goes down that low, preserve your capital. We'll look for the next one. But again, it's very rare that it goes down that low when you would actually sell. So, all right. Can you post your trades by no longer than 9 a.m.? Can you tell us when you're buying a call or put? Okay, Dwayne, I hope I pronounced it right. Oftentimes we don't know what our trades are going to be because we're still looking at the data that's coming in, even sometimes into 9:05, 9:10 before we make the determination. Uh, Very often, Aaron and I, it's not that clear. We're looking for clarity. So very often, Aaron and I, we're on the phone, we're texting, we're this, we're that, trying to determine this information. And a lot of times, based on the fundamentals and the technicals that he's seeing and I'm seeing, we still haven't ironed out yet a pick. So they can't guarantee you're going to get it before 9 o'clock. So, da, da, da. How do you simultaneously put in a 6% limit order while having a 40% stop loss? Try an OCO, one cancels the other. That may work with there. Okay, Lawrence, I'm not interested in anything except I'm basically a SPY guy. It's rare that I go in other stocks. Okay, it's sometimes like that. How many signals are expected during the day? We give out 3 to 5 signals a week, and they're usually in the mornings. They should be in the mornings. You're not going to get very many in the afternoon. I don't think we do any in the afternoon. We've changed our algorithm to not really trigger in the afternoon on that one. So, okay. All right. All right. I'm Bradley. Let's see. Back to your Friday trades. Were you trading 0 day T options to get the 511 calls for the buck and change? No, I'm not doing 0 day trades anymore on SPY. I'm going for the safety rather than the higher risk, higher reward, high risk trades with 0 day expirations. I found that a lot of people they're not comfortable with that. So especially in the trading room, a lot of new people, I'm trying to emphasize safety over that high risk element of it. Okay. If you want to go out on a limb and do those 0 day expirations based on our strategies and stuff, go for it. I know a lot of people are doing extremely well with that, and which is just awesome. All right. I mean, it truly is, but we can't. I'm trying not to go with those high risk trades for a lot of the people that are online. Some people lose a lot of money because they go into those 0 day expirations and they get spooked out or whatever. So I'm going to jump the gun on these questions here. Right. There's a lot of questions over the board. Okay. Yes. How do I get the options primer? All right. Let's just jump forward here, folks. Let's just jump forward in the options primer. All right. Okay. This is it. If you are new to options, we day trade SPY options, period. That's all we do. All right. We go on SPY. That's all we trade. SPY, SPY. This is the stock that follows the top 500 stocks in America. All right. Highest traded stock out there. It's affordable, diverse, and it's very, very liquid. No matter what you throw at SPY, you're gonna get a sell, a buy or a sell. Huge, huge profit potential. What I like about it most is exciting trading. Very exciting. I'm just as excited to trade SPY now as I ever was. I don't think I actually look forward to Monday mornings. I feel saddened when Friday comes because now, oh my gosh, I got to go to Whole weekend to not trade anything. It's terrible. Okay. What are options, folks? They're contracts. And the contract gives the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain date. You just have to know two names, calls and puts. If you expect the stock to rise, you buy a call option. If you expect the stock to drop, you buy a put option. Call up, put down. Options have strike prices. This is the set price at which the stock can be bought or sold when the option is exercised. We have no intention of ever exercising options. I don't care ever about holding the underlying stock. I just want to get the money. They also have expiration dates. This is the date at which the contract expires. When this thing expires, it's gone, gone forever. You're never gonna get your money if it expires. All right. Now, if it expires in the money, this is when the market price of the underlying security is above the strike price for calls or below the strike price for puts. All right. Options allows the options holder to exercise it profitably. If you're expired in the money, the broker reserves the right to assign you the stock. Make sure you are not in the options market at expiration. If you're in the money, you could be assigned the stock. They take the money out of your account, margin you, the whole works. Now you're the proud owner of 100 underlying shares for every contract of the options that you have. Okay. By the way, that could be very expensive. Out of the money, that's when the market price of the underlying security is below the strike price for calls or above the strike price for puts, and it becomes worthless. If you're 1 cent out of the money at expiration, you have lost everything. But it doesn't drop off right at 4 o'clock. You'll see it as you get closer to expiration. That's when you're going to see the theta loss, the time loss. You're going to see it disappear quite quickly. A lot of pros with options: flexibility, cost efficient, huge leverage, high return potential, many strategies available. I think it's just the most fun, exciting trading ever. I mean, it's so exciting. I can't wait to get out of bed to do this because I like to beat the market. See, it's a personal thing with me. It's like just a personal challenge. Some people like to, I don't know, with sports, right? They like they get into sports. Some people have a personal challenge. They go to the gym and they're always trying to outdo themselves, right? Or the kids today, video games. They want to be the best in their video, whatever it is. To me, I find that the trading is actually a very exciting thing. Now, there are some cons to this. I'm not going to paint this so rosy that no, it's a no risk situation. You got to make a fortune, and all right, you've got time decay that's going to work against you. You got commissions to deal with, and let's face it, it is risky. There is an element of risk. But I will say this, that over the years, we figured out what works and what doesn't work in both trading and training. And I like to think of it this way: basically, one stock, one strategy, 1 hour a day, you're going to make some pretty decent money. So why SPY, you ask? Well, SPY follows the top 500 stocks, efficient use of analysis time. The moves are fast. Again, my long-term strategies to the end of the day. Usually we're in and out in a few minutes. SPY is also fairly reliable, consistent, very predictive in its nature. It's also actually very forgiving. Even if you think you're wrong, give it a little bit of time, and chances are the market's going to come back in your direction. And you can anticipate prices in any market going up or down. So this is actually a really cool stock, SPY. Why SPY now? Learn something new, stay mentally sharp. Great for your cognitive skills. Earn while you learn. Time's going to pass anyway. You might as well make money along the way. Huge profit potential. If you're a serious trader, you can get in and out several times a day, many times during the day, and walk away with double-digit daily gains and achieve that dream lifestyle. Exciting and thrilling to beat the market. And here's what I like about it: you can pass your knowledge on to your kids for financial security. Both my kids know how to trade. If they ever need money or want money, they simply go to the stock market, and I tell them, you know what to do. Go do it, right? I'm not going to be giving you money all your life. You have to learn how to earn. and and they have their respective careers, but they also know how to trade, which is very comforting for me, very liberating, because I don't have to worry about them. Folks, let's say you want to buy 100 shares of the stock SPY. Probably cost you $500. That's $50,000 you can invest. Or You can buy one contract, which controls 100 underlying shares. Each contract controls 100 underlying shares, right? And it's probably maybe cost you $2, $3. Let's say $3. Well, that means it's going to cost you $300. Now, if the stock rises $1, your equity now is $50,100, right? However, if the stock goes up $1, your delta would be a 50 on this option. That means your option goes up 50 cents, while your option is now worth $350. Do the math. Your return on investment 0.2% on the stock, or a whopping 17% on the underlying option. Since discovering this, folks, I never went back to trading stocks ever before. Why would I do that? Folks, power of options. That's what it's all about. One stock, one strategy, 1 hour a day. Learn from our mistakes. You're not going to live long enough to make them all yourself. And I think that's really important. All right. So with that, I think we're going to call it a night. Thanks for joining us. As always, it's been a pleasure. And we'll see you back here, hopefully in the trading room or some of the other services that we provide. Check it out on our website, DayTradeSPY.
Trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just